It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And welcome back to another episode of the Real Estate Breakfast as we talk property news. We do that 7 days a week, as heard on iHeartRadio, Spotify and Apple Podcasts, as well as Amazon. Well, another weekend is tuned up. Gee, I tell you what, we're getting through June. July's going to be here soon enough. It is already June the 22nd. And see that a conveyancer in WA has been permanently banned from the Australian property sector for misappropriating nearly $30,000 from a business account, resulting in failed property settlements across Perth. Just imagine being on the end of this. The woman in question has been identified as a paralegal and conveyancer. She transferred funds from her company's trust account into her personal account, and the State Administrative Tribunal has imposed a lifetime ban and ordered her to pay nearly $5,500. So let's bring in Anthony Landahl, since it is our Saturday morning, because we're going to be talking mortgage and property in just a moment. He is the Managing Director from Equilibria Finance. And Anthony, we do say to do your due diligence, and even if you have, in some of these cases, you're actually never going to pick up on some of these people in question.
That's right. And firstly, it's good the law's caught up with her, and you're right. You build a team of trusted advisors, conveyancers, brokers around you, and you expect more. You do your due diligence. But as I said, it's good they've caught up with her in that case, and that'll be it for her in terms of that profession, which is a good thing.
Yes, and of course it's been a very busy week. You were here on Tuesday afternoon letting everybody know what the RBA decision was. And of course, you know, Michelle Bullock, her and her team did look at raising the rate.
Yes, the board did discuss the case for increasing interest rates at this meeting. You can think about the national accounts in a couple of ways. One is that people are they're saving less to support their consumption because they're very confident about the future. The other way you can interpret it is that people are really hurting. But the thing that's actually really quite positive is employment. Our forecasts see, with tax cuts coming, with inflation declining, that real income's going to start to rise again in the latter part of this year and into next year. And I think that will help people's confidence, that they'll actually see their real incomes rising. I think that'll be important.
Yeah, because, you know, if we didn't have jobs, boy, we would be in this mess even worse, further down the rabbit hole.
Yeah, that's right, Craig. We've still got very strong employment numbers, which is important through this time with all these cost of living pressures. Michelle Bullock's comments aren't surprising in the current environment. They obviously held rates, but I think some key data's coming up. July 31, we've got the quarterly inflation numbers. And as of the new financial year, which is just on the horizon, we've obviously got the tax cuts, and we've got some energy rebates and some rental rebates that could provide stimulus to the market. They're really focused on whether core inflation has stabilised or is falling. I'm not surprised they're discussing rate rises, and I think most economists now are factoring in there may well be a rate rise before the end of the calendar year.
Now, the market is experiencing this multi-speed housing market, and the regional markets seem to be continuing to gather in pace. And a recent report by CoreLogic looked at what's driving these multi-speed conditions. And I think you want to make some comments around this. So let's start with the data. What has been the cumulative changes in capital city dwelling values since the COVID-19 pandemic hit Australia, of course, back in March of 2020?
Yeah, we hear a lot of talk about how the housing market remains resilient, keeps growing. There's different hotspots and areas and opportunities, but some interesting data's come through from some CoreLogic research capturing pre-pandemic market conditions through to now, where we had some strong growth through the pandemic. The market's eased a bit and they've taken off again. Perth, Adelaide and Brisbane have grown, each of them individually, around 60% since before COVID. Canberra, Hobart, Sydney, Darwin is in and around 30% growth in housing values since February 2020, and Melbourne's 11%. So that's some really, really strong numbers. Admittedly, Perth, Adelaide and Brisbane are coming off a slightly lower base in terms of their affordability and in terms of their median house prices. Their median house prices still sit for Perth and Adelaide anyway, in and around the mid-700s. Brisbane's over $1 million. But that is quite some extraordinary growth, around 60% since the pandemic hit in February 2020 through until now.
Yes, you say extraordinary. It's not only extraordinary, but it's also very consistent. And when you hear the large number and you see it written, I looked at that report and thought, gee, this is sort of offering up something a little bit different. Many people sort of ask the question, well, what's sort of driving this? Why is this happening? Not everybody is kind of in the lane of understanding it, are they?
Yeah, look, it often is, you see the headlines or there's commentary around, look, there's just not enough houses or it's a supply and demand issue. And in simple terms, there's a lot of truth in that. I think a comment I made before that Perth, Adelaide and Brisbane are probably coming off a slightly lower base in terms of their median prices. They're more affordable, they're more attractive areas for people to be living in these difficult times. Fundamentally, it is a supply and demand issue. From the supply side, listings have been down a little bit in Perth, Adelaide and Brisbane in comparison to some of the other majors. And building completions have also been lower. So we're actually getting less supply in some of those areas that are also getting more demand. The main areas of demand are around internal migration of existing Australians within the country and net migration. Internal migration, we've seen a lot of net interstate migration going to areas such as Perth, Adelaide and Brisbane, which are more affordable, whereas Sydney and Melbourne's people have been moving away from. They've been getting out of those major capitals to some of these other areas. And then we've also had the migration from overseas, which, as we all know, has been growing very rapidly. Those migrants are tending to land in Sydney and Melbourne. They're tending to look at rental properties, which is impacting the rental market, but it's keeping demand strong in all of those areas, either people moving within Australia to Perth, your Adelaides, your Brisbanes, or the migrants coming into Australia, into some of those other majors, is keeping demand up, supplies down, prices keep growing.
All right, we are talking to Anthony Landahl this morning as part of our weekend Saturday mortgage talk. We'll come back, we'll talk more property after this.
From buying strategies, a fluctuating market, the importance of data, geographical differences, confidence in the market, rental yields. Stay informed every morning from 6 a.m.
Anthony, you've got the call. Which way did it go today?
Yeah, you can almost feel the relief in the air from mortgage holders that after a lot of talk whether rates would rise, and I imagine a lot of discussion from the board members, they have held the cash rate at 4.35% at today's meeting, which I think for a lot of mortgage holders facing some genuine affordability issues is a real relief.
Yeah, well, it certainly is, because it was, as I said, a sort of a 50-50 situation, and the inflation numbers, they don't lie. But I will say this about the RBA, they've held their nerve. A lot of these commentators, of course, were wanting to see it go up. They thought, no, there's enough indicators there, but they are holding firm.
They did hold firm. I think they're keeping a really close eye on the inflation, and they're just looking at how entrenched this domestic inflation is becoming.
From first-time home buyers to seasoned investors to breaking property news. Discover the stories behind the real estate.
And it is a real estate Saturday morning. If you are just falling out of bed and you have got an auction to attend today, good luck. In fact, good luck if you are transacting, no matter what you're doing, as far as perhaps securing your property, your dream property, hopefully today. We are back with Anthony Landahl, of course, and we're talking property. Now, Anthony, across the country's 50 largest non-capital cities, 19 markets now are at record growth. Where are we seeing this? And a lot of people will be saying, why are we seeing this?
Yeah, it's a good question, and it builds on what we were talking about before in terms of the housing market and its growth. The regionals behave a little bit differently than the major capitals. We saw the regionals fall about 6% after COVID, but now we've seen the regional values recover. albeit slower than the capital cities. They've regained those losses and are growing a little bit. In fact, we've seen some quarters over the last couple of years where the regionals have outpaced a lot of the major capitals. The regional markets are back. The main areas we're seeing that growth at record levels, interestingly, is sort of consistent with the major capitals. We're seeing it in the Western Australian regions where we've got the strong agriculture, we've got the strong tourist areas, we've got the infrastructure and the ports, and we're also seeing a lot of it in Queensland. So the regions are holding up in similar areas to the majors in terms of Western Australia and Queensland. We're seeing a bit of a drop or a lag in the regionals in New South Wales and Victoria. Some of the regionals that are commutable back into the major capitals and seen as more affordable are holding up. But fundamentally, that real strong growth in those regions where we're reaching those records are people essentially relocating to regions that support them from an economic perspective with the agriculture, with the ports, with the tourism, where they're actually relocating, and that's driving the growth. Again, there's limited supply and the demand's up, hence the prices are growing to record highs in a lot of those areas.
Yeah, and you do have to feel for people in those particular areas that are still renting. Of course, people coming in, as you say, it blows up that local area. Then those people that are not so fortunate to be homeowners, to have equity in property, they then have to turn around and skip on off to a smaller regional area. Now, I just want to come back because we kicked it off this morning talking about Michelle Bullock and the decision from the RBA. Played this a couple of days ago, but I want to play this again because this reporter asked this very, very interesting question, which in some ways is quite unfair, but this is what she said.
And what do you say to the Australians who are thinking, what the hell are you doing? Why is nothing working? And when can you tell them that they can expect some relief?
So I can't tell them when they can expect some relief. What I can say to them is I am very conscious that the high interest rates are hurting particular sectors of the economy more than others. Interest rates are part of what's hurting them, but inflation is really hurting them. Consumers are feeling it when they go to the supermarkets. Again, I can't tell them when we will bring interest rates down, but I can say that my laser focus and the board's laser focus is on bringing inflation down, and that will help them. That will really help them.
Interesting question, to say, what the hell are you doing? Nothing's working.
Yeah, it is an interesting question, but we've got to bear in mind the role of the RBA is to bring inflation down and have employment at the numbers they're looking at, and their lever is interest rates. And Michelle Bullock's right in making that comment that their role is to bring inflation down. And secondary to that is if inflation gets away from Australia, from the community, that's going to be a lot worse than how they're managing their interest rates. Our cash rate's still lower than international levels. It's a difficult job. There's government policy that's influencing inflation. There's other areas that are influencing and causing these inflationary pressures. In one sense, the governor's right. If we let inflation get away, it's going to cause a lot more damage than some of this pain people are going through at the moment with the higher rates and some of the cost of living pressures.
All right, the surfing mortgage broker, Anthony Landahl, thank you for your comments. And I don't know what the weather's doing today, but enjoy a surf if you're heading outside. Yeah, thanks for that. I'll tell you something, it's warmer in the water than outside at the moment, so it's not a bad place to be, albeit wetsuits are certainly on at this time of year in the surf.
From interest rates rising, a shifting landscape, rentals running hot, clearance rates, a tight rental market, we cover it all every morning from 6 a.m. on the Real Estate Breakfast. We connect you to the best real estate information across Australia. The Real Estate Podcast.